All right, hi everyone. All right, hi Nick, great to see you. All right, welcome back to another pre-market live analysis session brought to you by IC Markets Global. Right, trust you've all had a great weekend. Right, great to see all the requests coming in as well. All right, hi Nick. Yep, definitely we'll be starting off with gold, the dollar index, gold, and the euro as well. Right, right, great. All right, okay. Before we start, as usual, let's take a quick look at the disclaimer. Right. Take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we've been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a look at the economic calendar for this week. Right, there's quite a few things going on, but I just want to bring your attention to the monetary policy statement and press conference by the Bank of Canada that's going to take place on 23rd of October, Wednesday. Right, then we've also got flash PMI data out of the Euro area and out of the US, and it's going to be on Thursday, the 24th. Right, so we can see here, along with the events that I've mentioned, right, you've also got a few central bank officials speaking as well. Right, you've got Bank of England Governor Andrew Bailey speaking on Tuesday, 1:25 p.m. We also have ECB President Christine Lagarde at 7:15 p.m. GMT on the same day. And of course, we've got the Bank of Canada's meeting taking place on Wednesday, 23rd of October. The statement is going to be released at 1:45 p.m. GMT, followed by the press conference about 45 minutes later at 2:30 p.m. GMT. We can see, right, the overnight rate for Canada currently sits at 4.25% to 4.25%, and the central bank is looking to make 50 basis point cut on Wednesday to bring it down to 3.75%. Right, and then on Thursday, right, we can see there's a barrage of flash PMI data for the Euro area, including for France, Germany, and of course also for the UK as well. And then wrapping things up with the US. We've also got retail sales out of Canada, and that's on Friday at 12:30 p.m. GMT. Right, so taking a look at the overnight rate in Canada, right, we can see that this central bank has cut its rates for the third consecutive meeting, right? Over the last three meetings, they've cut it by 25 basis points to bring it down to 4.25% in September, right? They can see here at the previous meeting, policymakers were reiterating concerns about undershooting inflation and were worried about running into over tightening, right? So we can see that the labor market also has continued to slow in recent months, but the wage growth remains somewhat relatively elevated when compared to productivity. But you can see inflation. When we look at the charts for inflation, we can see clearly that inflation has moderated significantly in Canada, which has allowed the which has allowed the BOC to make three consecutive rate cuts of 25 basis points. But when we look at the forecast for this week, we can see that they're moving ahead with a much larger reduction of 50 basis points, right? And that can be attributed to how quickly inflationary pressures have dissipated in Canada, right? Looking here, we have the chart for headline CPI, which is on the left, and on the right is the chart for core CPI, both of which are on an annualized basis. Right, so we can see here headline inflation has fallen down to 1.6% year over year in September, right? A sharp drop from the previous month, and it is the lowest level since February of 2021. Right, not only did we see inflation moderate significantly lower in September, it also came in well below the market consensus of 1.9%. Right, and it was also the second month in a row where headline CPI has matched or come in under the Bank of Canada's target of 2%. And core CPI as well, right? We can see that it's been under 2% since July as well, right? Coming in at about 1.7% in July, 1.5% in August, and edging a little bit higher to 1.6% year over year in September, right? Despite a slight uptick in core inflation in September, we can see that overall inflation continues to moderate lower in Canada, which paves the way forward for the Bank of Canada for the BOC to already move ahead with 3 consecutive rate cuts, and for the fourth meeting in a row coming up later this Wednesday, they're going to be looking at a much bigger reduction of 50 basis points, right? And also we can see that GDP activity in Canada has been relatively muted over the last 5 months, right? And you can see here since 2023, or rather end of 2024, right? The last quarter 2024 onwards, we can see GDP activity has pulled back quite sharply, right? Dropping under probably what was an average of about 4% growth. Right now, it's coming in at about just under 1.1%. So economic activity has been muted over the last 5 months. So this rate cut is also aimed at kickstarting Canada's economy as well. So we can probably expect the Canadian dollar to face significant headwinds on Wednesday, right? Especially if they do move ahead with this reduction of 50 basis points. And of course, we see a statement and a press conference that conveys further dovish rhetoric on the outlook for future monetary policy action. So the Canadian dollar or the loonie is going to face significant pressures on this day, right? We can probably expect the dollar CAD to continue to rise higher. Alright, so with that, now let's move on over to the charts and trading view. And of course, we've already seen Nick drop his request for the dollar index, gold, and the euro. And of course, if there's any other instruments that you'd like to see, right, please do drop them in the chat box as well. I'll be more than happy to go through the analysis with you. But of course, let's start, of course, with the dollar index. Then we'll take a look at the euro, then move on over to then we'll take a look at dollar CAD as well. Of course, since we've got a major central bank announcement by them coming up this Wednesday, then we'll slide on down over to the commodities. We'll take a look at gold, crude oil, then look at the indices, and then coming back to any other instruments that you would like to have a look at. Alright, okay, so starting on the dollar index, right, we can see that, let's just quickly take a look at it on a weekly basis. We can see that last Friday, as markets closed, the dollar has notched its third consecutive weekly gain, right? You can see at the end of September, or the first week of October rather, right, we've seen a very strong jump in demand for the US dollar, causing dollar index to go from about 100.40 and closing at about 102.50, right? So over this period, right, it's already from its lowest point to this highest points of last Friday, right? It's already gained almost 3.7%, right? It's gained almost 3.7%, gaining about 370 pips in the process. And you can see here on the daily time frame, right, this index has gained well over 3.6%, right, 3.5%, and at the same time, of course, registering about 370 pips as well. So very strong move in the dollar index, stronger demand, right, combined by a combination of strong ADP data, right? So on Wednesday, 2nd of October, ADP employment report was released, followed by the non-farm payrolls on Wednesday, 4th of October, right? Both of which reported a nice rebound in job creation, while the unemployment rate edged slightly lower, right? Triggering higher demand for the US dollar, right? And the following week, we also had CPI data out of the US. We saw CPI data out on Thursday, 10th of October, followed by PPI data on Friday as well. Now we're looking at the core readings for the respective data, right? Consumer price inflation and producer price inflation. It showed a slight acceleration in the core readings, which also functioned as continued bullish catalyst for the dollar index. So hence, right, we've seen a combination of stronger than expected labor market data and a slight uptick in core inflation for both CPI and PPI, which has propelled this strong move for the dollar index since the beginning, since the last day of September, and for most parts of October. Right, but the dollar index looks to have finally stalled. Right, it looks to have finally stalled last Friday. Right, part of this can be attributed. Right, part of this the move in the stock can be attributed to a little bit of profit taking, and also we've had China release another round of stimulus measures as well, right, or funding schemes, right, so to help boost the stock market. So on Friday, right, the Chinese government launched two more funding schemes to help boost the stock market. The Chinese equities rallied and lifting other stocks as well, and at the same time, right, we also saw the commodity related currencies such as the Australian dollar and the Canadian dollar gained a little bit as well, right? So that is why we saw the dollar index pull back a little bit, right? Pulling back against the majority of its major trading partners. And but however, you can see it's still notched its third weekly gains. You can see here how the dollar index has sort of run out of steam last Friday due to a combination of profit taking and this recent announcement by China as well with regards to two brand new funding schemes to help boost its stock market. Right, so this is why part of the reason here we can see the dollar index pulling back quite uh, sharply on Friday, right? And it's also a level, right? It topped out at around 103.80, which is also a level that has the presence of a 61.8% Fibonacci retracement, right? We can see we found this retracement by starting from here. The highest point is here, 28th of June, going down to the lowest point, which is here 27th of September. We can see the 61.8% retracement sits at 103.84, right? This is a level where the dollar index has stalled as well previously. This level here functioned as a nice swing low support, right, in mid-July, right? You can see it forming a nice swing low support here, and it is where it has run into resistance as well, right, slightly above this support here. So what was previously a strong swing low support can function as resistance, which is what has appeared to last Thursday and Friday, right? So the combination of the pullback resistance and the 61.8% Fibonacci retracement, right, is where we've identified a potential resistance barrier for the dollar index and where it has stalled quite nicely last Thursday and Friday as well. Now slightly higher up, there's a nice overlap level at 104.68. You can see previously it functioned as support in mid-June, after which it functioned as resistance right at the end of July. And we can also see that this level here, this overlap resistance level, is accompanied by a 78.6% Fibonacci retracement. Right, so with dollar index pulling back quite sharply last Friday, right, it could continue to slide lower as well. And I've identified this level here at 103.27 as a downside confirmation level. This is actually a nice pullback support, right? Previously, this level functioned as resistance here, right, from, let's see, from 6th of August till 15th of August, right, for almost a period of 1 week. The dollar index failed to break above this level here before reversing to drop, or before reversing to continue its downtrend, right? So you can see here this was previously a pretty decent resistance barrier, right? Then it got taken out here very cleanly last Wednesday. So this then creates a nice pullback support level here. So this pullback, we're using it in identification of a downside confirmation level, right? Because we see, should we see the dollar continue to sell off strongly, right, it may we may see it pull back even a little bit further, right? That's not really a very good ascending trend line, right? But generally you can see this is a strong bullish uptrend, and this trend line here has touched the bottom of these candles here since 14th of October several times. So it does look like we've had a trend breakout as well. So should we see the dollar index break below this pullback support at 103.27, it could likely trigger further downside moves for this currency, for this index, right? And the next major support beyond the downside confirmation, take note the downside confirmation level also serves as a pullback support level, right? But a clean break below this downside confirmation at 103.27, right, is likely to attract more sellers, and we can probably expect the dollar index to fall down towards the first support at 102.55, right? This is a nice overlap level, right? You can see previously this level here functioning as resistance in January, a little bit of resistance here in December of last year, then making a nice swing low support here in mid-March or early March, then finding decent support once more on 5th of August and then 14th of August. And you can see here there's a little bit of resistance as well, right? The dollar index running into a little bit of resistance post non-farm payrolls before finally breaking higher. So this level at 102.55 is indeed a very significant overlap level, right? It's a very significant overlap level, which is now serving as the first support, or identified as the first support, and it's also accompanied by Fibonacci retracement at 38.2%. So this retracement level was found by starting from here, this low on 27th of September, going up to the high of last Thursday. Oops, oh, what is going on? There we go, last Thursday, and we can see that a 38.2% retracement aligns pretty close to the overlap support. Right, so take note, right, the downside confirmation level at 103.27 also serves as a pullback support level, but since we've seen a very sharp pullback for the dollar index last Friday, right, maybe we can see the downside momentum pick up further, and then we would get confirmation of that should we see the dollar index break through this level at 103.27 and perhaps drop all the way down or close to the first support. Now looking at the RSI and stochastic as well, both of which highlighted a pretty good oversold condition, right? Potential oversold condition last Thursday, 7th of October, right? With RSI hitting about 74 and stochastic hitting about 100 as well, or coming very close to 100. And last time we saw an oversold condition like such as this, similar to this, I would say, would be on 16th of April, right? You can see here on 16th of April, RSI hitting about 74.7 as well. Similar levels to what we are seeing last Thursday, right? At the same time, we are seeing the stochastic oscillator indicate another oversold condition, as overbought condition as well. So pardon me, these are overbought conditions here, right? So the last time we saw this overbought condition that we have seen on Thursday, 17th of October, the last time we saw that, a similar setup was on 16th of April, and this is where you can see the dollar index has topped out as well. Right, so previously in mid-April, right, the dollar index climbed as high as 106.52, right, and then after that it stalled around this level, to continue to trade underneath, or this level served as a strong barrier, continue to trade underneath this level before reversing in May, right? So once again, we're seeing a similar technical setup as well. The RSI and stochastic oscillator indicating a potential overbought condition. So probably we can expect the dollar index, right, to run to ease a little bit and perhaps drop down towards the downside confirmation. However, take note, if we do see more sellers come into the market, right, this pullback level at 103.27 could also serve as a potential downside confirmation level, right? So take note, these are the key levels for the dollar index on the daily time frame here today, and as markets reopen, we could see this index drift a little bit lower or continue to fall, and this pullback support level at 103.27 is going to be a major deciding factor here for the direction of the dollar index. Right, hi Sadelmo. Right, okay, yes, gold and the US dollar have shared what we call a positive correlation, right? Recently, right, if you look at, let's do a quick comparison. Do just a quick comparison. Right, so take note, the candles, the green and white candles are for the dollar index, and this maroon line is for the price of spot gold, right? So XAU USD is price for spot gold, and we can see here, right, since right the last day of September, pretty much you can see with demand for the US dollar rising, so dollar index is also of course risen very sharply, right, risen for 3 consecutive weeks. And over the same time, over the same period, we've seen spot gold prices pull back slightly, right. It made a previous intraday high at around $2,673 on 26th of September before pulling back to around 2,608 on 9th of October. But since then, it staged a very strong rally as well. So take note, right, there's a lot of central bank buying that's going on in the background as well. Major central banks around the world, right, such as China, Turkey, among others, right, purchasing physical gold at very consistent and elevated levels as well, which has continued to keep gold prices elevated. So despite the US dollar rising very sharply as well, right, we did see an initial pullback in the prices of gold, but since then it's actually now exhibiting positive correlation, right, and we can see both of these asset classes move higher together, right. So just something to take note as well, right. Well pointed out, Sanelmo, right. Currently we are seeing let's say, I would say since 9th of October, 10th of October, strong positive correlation between gold prices and the value of dollar index, which doesn't happen very often, right. It can happen in time, right, but otherwise this is not very common. However, with dollar index pulling off quite sharply last week, perhaps, and if it does continue to drop lower, we may see this positive correlation fade and return, and we may see normal resumption of the negative correlation. Alright, now let's take a look at the euro, then we'll take a look at dollar CAD as well before moving over to the commodities. Right, you can see here the euro has sold off very sharply as well as demand for the dollar increased, right. Of course, with demand for the dollar increasing and seeing the dollar index rise rapidly over the last 3 weeks, naturally we're going to see the euro pull back sharply as well. Remember, the dollar index is a basket that measures the value of the strength of the US dollar versus its peers, and the biggest component of that basket is the euro as well, making up about, I think, 50 or 55%. So if you see the dollar index rising rapidly like this in a certain direction, you can definitely expect the euro to be heading sharply in the opposite direction as well. Now we can see this currency pair stabilizing last Thursday, right. It dropped as low as 1.0811 before retracing a little bit higher, and it staged a nice rebound on Friday as well, right. Remember, as with the dollar index selling off sharply last Friday due to the stimulus measures by China, latest stimulus measures by China, as well as potential profit taking in the dollar, we've seen this currency pair, the euro, stabilize at around 1.0830 and has staged a minor rebound for now, right. So where I see a major overlap level, let me see if there's a 23% that we could potentially use as well. Right, looking at where the 23.6% sits as well previously, there's a little barrier here. You can see there's a big gap up here that occurred on Monday, 5th of August. There's a pretty big gap that occurred here. It got filled pretty close and before moving higher, right. So I do see some sort of what was previously a little support level here at 1.0910, right. This level here at 1.0910 was previously a nice support level, which can potentially function as resistance as well. So, and we can see that this pullback resistance level is also accompanied by a Fibonacci retracement 23.6%. So I'm quite inclined now to identify this as the pivot, right. The pivot for the euro is at 1.0910, and the first major support is at this overlap level here at 1.0949. So this is where the first resistance is. Right, and then the you can see by the 50% retracement is, there's a nice swing low taking place on 11th of September. This can now potentially function as a pullback resistance. So this is something to take note of in the future should we see the euro continue to climb higher. This is at 1.1011, a nice pullback resistance level that's accompanied by 50%. Right, currently it's a little bit far from where this currency pair is currently trading at, or where it closed. Right, so for now we don't really need this level to be highlighted, but it's something to take note of in the future should we see the the euro continue to climb higher. Let's keep 23 and 38.2%. Right, and we can see here this overlap resistance at 1.0949, right, has previously functioned as a nice swing high resistance here. Right, previously functioning as a nice swing high resistance here on 13th of March, another swing high resistance here in mid-July, and then briefly running the resistance here as well in early August before finally climbing higher. And we can see actually a nice rebound here on 15th of August, and a little bit of a support here as well on the 10th of October as well, right? Oops, sorry, not here, sorry. This support level here on 4th of October, right? So you can see this creates a nice overlap level at 1.0949, which has been identified as the first resistance. So it's actually an overlap resistance that's accompanied by a Fibonacci retracement at 38.2%. Right, so take note with the euro rebounding strongly last Friday, right, as the dollar index was selling off, right, we can expect the euro to perhaps run into a little bit of resistance here. At the pivot is a pullback resistance at 1.0910, which is accompanied by the 23.6% Fibonacci retracement. But remember, on the dollar index, we have this downside confirmation level here at 1.0327, right? So if this level gives way on the dollar index, we can definitely expect the euro to climb above the pivot, right? Instead of stalling at around the pivot, we can very likely expect the euro to break above the pivot and rise towards the first resistance. So take note, right, on the dollar index, this downside confirmation level at 103.27 is going to be pretty key, right? So it's going to tell us the difference between a resumption of the uptrend for the dollar index, or whether this pullback is going to extend further, right? So similarly, we can expect this pivot level here for the euro to either serve as resistance before resuming the downtrend, or if we do see the dollar index pull back even further, then quite likely this pivot is not going to hold, and we can expect the euro to probably rise up close to its first resistance here. All right, so these are the key levels for the euro. And similarly, right, as how we looked at the stochastic and RSI indicators for the dollar index, what we saw as a potential overbought condition for the dollar index, we have seen an oversold condition for the euro last Thursday, right? We can see last Thursday RSI dropping as low as 26.38, stochastic oscillator dropping under 5 as well, right? When these two momentum indicators line up as such as this at the lower extremes, it highlights a potential oversold condition, and it is where exactly the euro has stabilized and rebounded quite strongly last Friday. Now, the last time we saw an oversold condition such as this was back in 16th of April, right? Very similar to the dollar index, right? Remember, these are the similar dates for the dollar index as well, where we saw the momentum indicators highlight a potential overbought condition. So what is going to be a potential overbought condition on the dollar index? Of course, it's going to be a potential oversold condition on the dollar index. So we did see the euro stabilize at around 1.0615 in mid-April before staging a very nice rebound. Right, so similarly, perhaps we could see the euro stabilize at current levels and continue to grind higher as well. So take note, it's a similar technical setup, right? It doesn't mean that we're going to see the exact same move take place. We're not going to see the same absolute move take place, right? But it's something to pay attention to, because these sort of overbought and oversold conditions don't really occur very regularly on a daily time frame, right? So take note, this is something to really keep an eye on. So we may see some stabilization in the euro here, and perhaps we may see continue to climb higher. But take note what is the make or break level would be this downside confirmation on the dollar index, right? So this is going to give us we might get a better clarity over the next couple of days, right? Markets reopening very shortly, so maybe by Tuesday, tomorrow, right, we may get a better idea of whether this downside confirmation level is going to hold. And remember, if it doesn't hold, then we can probably expect more sellers to come in and drive the dollar index lower down towards the first support, and that would potentially mean the euro continuing to climb higher, perhaps even breaking above its pivot level at 1.0910 and rising up towards the first resistance. Alright, so take note, these are the key levels for the dollar index on the daily time frame here. Let's move on over to dollar CAD. right? We'll move on over to the dollar CAD. Since we've got a major central bank announcement by the BOC and the press conference as well, right? So despite the dollar index selling off quite sharply, right? Despite the dollar index selling off quite sharply on Friday, 18th of October, we can see the dollar CAD holding up quite well. So despite the Canadian dollar, which is the loonie, appreciating a little bit last Friday, right? It's not made much of a dent in the dollar CAD. We actually can see it's still steaming ahead, right? It was still rising very strongly last Thursday and Friday as well, right? We see it running into resistance here on Tuesday, 15th of October at 1.3838. So this is where we identified the pivot once more. This is like a swing high resistance that occurred on 15th of October. So with a major central bank announcement coming up, right? The Bank of Canada is expected to reduce its overnight rate by 50 basis points, and that could add further downward pressure on the loonie. So if the loonie comes under pressure, we can expect dollar CAD to continue to rise higher, and that's why the pivot has been identified at 1.3838, which is a swing high resistance that occurred on Tuesday, 15th of October. So we can probably expect the dollar CAD to rise a little bit higher, or continue to rise higher, and especially with the announcement taking place on Wednesday, right? This is a pivot level that's quite likely going to be reached by then as well, right? And then higher up, the first major resistance is at 1.3879. This is swing high resistance that's occurred on right at the beginning of August. And in terms of support, we can see the dollar index, the dollar CAD, as it pulled back on Tuesday and Wednesday, 15th and 16th of October. We can see it stabilized at around 1.3750 before staging a strong rebound last Thursday and Friday. So that's nice, almost like a mini swing low support here, or pullback support here taking place in mid-October. And this level here is also accompanied by a Fibonacci retracement at 23.6%. We found this retracement level starting from here, this swing low on 25th of September, going up to the swing high here on the 15th. So this is where the 23.6% lies pretty close to this little swing that's taken place here last Wednesday and Thursday. Right, so take note, the Canadian dollar could likely come under significant selling pressures on Wednesday. So that means we could see dollar CAD push higher, right, towards the pivot. If it hasn't already reached the pivot by then, it's very likely it's going to reach the pivot by Wednesday, and it's a level where we could see it stall once more and pull back slightly. So take note, these are the key levels for the dollar CAD on the daily time frame. All right, thanks Nick, thanks for reminding everyone to smash the like button as well, right? All right, great to see all of you interacting as well, and do drop any further requests for any analysis as well in the chat box. All right, so we've covered the dollar index, the euro, the dollar CAD. Right, let's move on over to the commodities. Let's take a look at gold. Right, XAU USD. Right, we can see it break above its previous intraday high. Right, this was a previous intraday all-time high that was formed on Thursdays, 26th of September, which got broken very cleanly last Thursday as well. And then we saw gold prices continue to climb even higher, right? You can see gold has been rising very strongly, and it's approaching with price making a new breaking out of a previous all-time high and making a new intraday all-time high. So if we look at it, the new intraday all-time high for spot gold prices is at around $2,722.54, right? We can see that it closed at $2,721.91 last Friday, and the latest intraday all-time high sits at $2,722.54 per ounce. Now, of course, with price making new intraday all-time highs, right, we have to rely on Fibonacci tools such as Fibonacci projections and Fibonacci extensions to identify the next potential resistance barriers. So in the case of the pivot is a resistance barrier that has been identified by a Fibonacci confluence, which is the 61.8% retrace projection and the 161.8 extension. So we found this extension level by running a retracement. So we started the retracement from here, 26th of September, going down to the low on the 10th of October. Key extension level sit at 127 and 161%. 127% has clearly been surpassed, and 161% sits at $2,735. Now, we've also used a Fibonacci projection. This projection started from here, 0.1 on 4th of September, 0.2 on 26th of September, and zero point 0.3 on the 10th of October. We can see that the 61.8% projection aligns very well with the extension at 161%, and we can see that the 78.6% projection sits at around 2,774. So that's how we've identified the next major resistance levels beyond the intraday all-time high. Guys, this is a very good example of how we can use Fibonacci projections and Fibonacci extensions to help us identify potential resistance areas when price is trading close to a new intraday all-time high. Okay, so take note, we have a Fibonacci confluence at $2,735, which has been identified as a pivot, and the first resistance at 2,774. In terms of support, right, we see a nice pullback support at 2,672. Remember previously, this resistance level here, swing high resistance on Thursday, 26th of September, was close to the intraday all-time high after breaking out of this level cleanly last Thursday. Is this level now proceeds to function as a nice pullback support level here. Right, so if you're long on gold prices, right, if you're long on spot gold, right, identifying your pivot, identifying your first potential take profit target and around the pivot is a suitable area to do so. Right, so this level here, remember this pivot level is actually a resistance barrier that's identified by a Fibonacci confluence. So identifying your take profit target close to this pivot level would be a suitable area to do so for any long gold trades. Right, now of course over the next few days, if we do see gold prices pull back, and if it comes close towards this first support level here at around 2,672 or 2,680, right, this may be another good opportunity to go long on gold as well. Right, you can see here most of the pullbacks have been stabilized before resuming the uptrend as well. So this first support level at 2,672 is another potential pullback support area, which can help us identify a potential entry as well. Right, and maybe I can probably identify a pretty decent ascending trend line as well. Right, it's a pretty decent ascending trend line. How far does it stretch? I think this is probably good enough. Yeah, you can see here, this is a nice ascending trend line that has been supported several times. You can see spot gold prices bouncing off this ascending trend line several times since 4th of September. And this is also where it intersects quite nicely with the pullback support level as well. This helps us identify a major support area for spot gold prices, and we could potentially use this as a nice entry point to go long on gold again. Alright, so these are the key levels for spot gold prices. Right, take note of first support at $2,672, which is a pullback support level. And then we have the pivot at 2,735 identified by Fibonacci confluence. This pivot level can be used in the identification of a potential price target for long gold trades. And of course, the next resistance beyond is identified by the 78.6% projection, and that's at $2,774. Hi, Sadamo. Oh, yes, yeah, you're right. There's a combination of geopolitical element as well in the equation, right? So that as well, of course, has been keeping gold prices elevated as well, right? Ongoing geopolitical tensions have kept safe haven assets or commodities such as gold and crude oil elevated as well, right? Or well, not so much for crude oil, but more for gold, right? That you're right. Geopolitical tensions have also played a part in this equation. Right, now let's move on over to XTI USD. This is the instrument that tracks the WTI crude oil futures, and you can see this commodity facing very wild swings. Right, it's facing very wild swings, highlighting the current ongoing volatility. Right, since the first week of July, right, it has moved down significantly lower. Right, making a series of lower highs, lower lows, but you can see there have been very strong counter trend rallies throughout this downtrend as well. And just like we saw a very strong counter trend rally take place at the beginning of October, we've seen that counter trend rally fizzle out and reverse the drop very sharply as well. So if you just look at it here, just from last Thursday, or well, not last Thursday, 2 Thursdays ago to last Friday, you can see gold crude oil prices, right, WTI prices have dropped 10% in in a matter of 7 to 8 trading days. And if I take it from as high as 8th of October, it has dropped almost 13% as well, right? And just as sharply as it dropped, remember there was a very nice strong counter trend rally that took place from in the beginning of October. We can see crude prices rallying 15%, right, to hit a high of about 70, coming very close to $79 per barrel, right, gaining 15% here in the beginning of October, the first couple of weeks of October, and at the end of September as well. Mid-September onwards, it staged another nice counter trend rally, gaining almost or gaining over 10%. So we can see, despite we have seen large moves to the downside and upside for crude oil as well, right? So take note, it's extremely volatile, right, making big moves of 7 to 8% to 10% in either direction in a matter of like 5 to 6 trading days as well, right? So very strong moves to either side, highlighting the high volatility for this commodity. All right, so we can see here crude prices selling off quite sharply last Friday, and this is a level, it's approaching a level where WXTI USD stabilized at the end of September at around $68.20 per barrel before staging a very nice rebound. So this is a level where it once again could stabilize. So if you've been shorting crude oil, and if you've been shorting crude oil since last week, right, identifying your take profit target at around this pivot level at $68.30 per barrel is a suitable area to do so for any short trades as well. So take note, this is a level where crude prices have stabilized previously very strongly before staging a very strong rebound, right? And also beyond this pivot level here, there's a nice swing low support taking place here in mid-September at around $66.60 per barrel, right? This is a nice swing low support taking place here. So that's how the first support has been identified. Now first resistance is an overlap level, right? It previously functioned as a nice swing low support here on 5th of August, another swing low support here on 21st of August, after which it proceeded to function as resistance here at the end of September. So this creates a very nice overlap level, right? Is a nice overlap level, and you can see here as well, it functioned as nice support on the 9th of October. So clearly we can see XTI USD has reacted off this level several times, indicating a very significant overlap level, which we have used in the identification of the first resistance. So the first resistance is an overlap resistance that's also accompanied by a Fibonacci retracement at 50%. So we found this retracement level by starting from here, 10th of October, this high on 10th of October, going down to the low of last Friday. We can see that the trend line of the Fibonacci retracement tool captures the market structure very well, right? When it captures the market structure very well, the subsequent retracement levels are quite likely to function as pretty strong resistance barriers as well. Now we also have what's this? Okay, this is okay. I think this retracement is probably no longer valid. Let me take a quick look. Yep, this retracement is no longer valid, so let's just take it out. Yeah, so take note, if you've been shorting crude oil prices since last week, or if today's market opens and we see this commodity slide lower, right? So take note, this pivot level is an area where you can identify a potential take profit target for any short trades for XTI USD. Right, okay, let's see if there's anything else. US crude. All right, hi Abby. Yes, we've just covered US crude oil. So take note, on IC markets, XTI USD is the instrument that tracks the WTI crude oil futures, and we've just covered that as well, right? You can see here it's trading in a strong downtrend since Thursday, 10th of October, right? And is heading towards a support level that's identified by the pivot, right? This is a nice swing low taking place here at the end of September, early October. Nice swing low support taking place. It's where crude oil is quite likely to drift fall towards once more, and should it hit this level here or come close to this level, this is an area that you can target as a potential take profit level for any short trades for XTI USD that you may have. All right, okay, let's this is XTI USD. So we've covered most of the some of the major currency pairs, the commodities. Let's take a look at the indices. We'll look at DE40, US 500, and then we'll take a look at Bitcoin as well. So looking at DE40, this is the instrument that tracks the DAX futures, and we can see it has made a new intraday high last Thursday, right? This is the latest intraday all-time high for DAX on DE40, and that's at 19,681.50. Right, so once again, similar to gold, when a particular instrument is trading close to its intraday all-time high, we're going to be relying on Fibonacci tools such as projections and extensions to help us identify the next resistance barriers. So in case of the pivot at 19,715 was identified by Fibonacci projection at 61.8% and an extension at 127%. So this extension level was found by running a retracement from here, this high on 27th of September going down to the low on 8th of October. We can see the 127% extension, the extension levels at 127% and 161% still valid. And we've also run a projection starting from here, 0.1 starting on 10th of September, going up to 0.2 on the 27th and ending at 0.38 of October. We can see that the respective projection levels sit pretty close to the extension levels, highlighting a strong resistance barrier and the Fibonacci confluence as well. So there are two Fibonacci confluences here that we've used in the identification of the pivot and in the identification of the first resistance. So if we do see DE40 continue to push higher, right, the pivot can be identified as the first potential take profit target, right? And of course, if we do see this instrument continue to climb higher, we can then use the second Fibonacci confluence area as the next potential price target for any long trades. Similarly, I see a nice pullback support level or overlap support level at 19,339. We can see that this level previously functioned as resistance at the end of September, early October, after which it functioned as nice support on the 16th, creating an overlap level, which we can use in the identification of the first support. So we have a nice support level identified by an overlap at 19,399 as well as the ascending trend line, right? So should we see the E40 perhaps maybe even pull back towards this area once more, right? It is an area where it could stabilize and resume the uptrend. So it helps us also identify a potential long entry should we see equity markets pull back, right? Particularly for DE40 pull back towards this zone, and if it holds around here, it identifies a nice potential long entry once more, with the pivot and resistance, first resistance identified as potential price targets. Right, now let's move on over to US 500. Right, similar story here. We see it making a new intraday all-time high last Thursday, and that's at 5,882. Right, a new intraday all-time high being formed. And once again, we've relied on Fibonacci projection to help us identify the next resistance barrier. So in this case, we've only used the projection because I couldn't find any extensions, right? Most of the extensions have already been exceeded. So we're just using projections here. So this projection was found by starting from 0.1, 6th of September, going up to 0.2 on the 26th of September, and ending at 0.3 on 2nd of October. Right, so the pivot levels at 5,916 is a Fibonacci projection at 61.8%, and the first resistance is a Fibonacci projection at 78.6%. Right, so what these levels mean is also they can be used, of course, used as potential price targets for any long trades. So if we do see US 500 break above its current intraday all-time high at 5,882, it could pave the way forward for further uprise, for further ascent towards the pivot, which can be used as a potential price target. Now, in terms of support, when the US 500 pulled back sharply on Tuesday, 15th of October, it managed to stabilize at around 5,815. Right, it's nice, pretty decent, like a pullback support level here, which we can use in the identification of the first support. Now, let me see if there's a Fibonacci retracement that we could use, perhaps from here, this downtrend here, 2nd of October to the all-time high, right? Perhaps that's a 38.2% that we can use as well, right? 38.2% is here, right? And let's see on the slightly stronger uptrend, can we draw another retracement from this swing low, 6th of September, going up to this high here? Let's see if the 23% lines up anywhere. Nope. For now, I think we'll just keep 38.2%. Right, so you can see we've run a Fibonacci retracement on a slightly longer uptrend that begins from 6th of September. Right, we couldn't find any retracement levels here. That's fine. And at the same time, we've also run another Fibonacci retracement on this slightly smaller uptrend beginning from 2nd of October, ending to last Thursday. Right? In this case, we can see a 38.2% retracement level sit pretty close with the first support. All right. Okay, so these are the key levels for US 500, right? So if today, if equity of this week, rather, if equity markets continue to push higher, and especially for US 500, if it breaks above its intraday all-time high at 5,882, it's quite likely to make a run towards the pivot, which is where we can identify a potential take profit target as well. Right? And of course, if markets continue to climb even higher, right, then for US 500, we can use the 78.6% projection as the next potential price target. Now, before we move on to the next analysis, we can cover Bitcoin as well. I'm just going to quickly launch a poll. I'd truly appreciate it if you guys could give your feedback with regards to today's webinar, and then we'll continue the session with Bitcoin. Alright, just launched the poll as well. Truly appreciate it if you guys can give your feedback. And also thanks for smashing the like button as well. Right, and now we'll just continue with Bitcoin as well. And then if there's any other requests, we're more than happy to go through that with you. Otherwise, we'll just cover one of the other instruments. Perhaps we can cover the Aussie or the Kiwi as well. Right, so Bitcoin is trading at around 68,894. Looks like it's the bullish momentum is continuing beyond the pivot level here. So this pivot level here at 68,495 was identified as a swing high resistance, or rather as like a multi-swing high resistance. And you can see the first swing high taking, hang on, there we go. You can see the first swing high resistance taking place here on 22nd of July, and the second one taking place about right at the end of July. So we see a nice multi-swing high resistance barrier here. It is where Bitcoin stalled last Friday and last Saturday as well, but it looks like today it looks to be making instead a bullish break above this pivot level here. So instead, with Bitcoin of course trading over the weekend as well, it looks to be making a bullish breakout rather than a bullish reversal as we currently speak. Right, so for today, right, especially when last Friday and Saturday Bitcoin stalled around this level. Initially I was expecting it to pull back a little bit, but it looks like the bulls are still in control, and it looks like we're having a bullish breakout, a potential bullish breakout for Bitcoin through the pivot at 68,495. Now this bullish breakout extends, right? Take note, we also see the top of this wick climbing as high as $70,038, right? So this level is something to keep an eye on as well. So if this bullish breakout does materialize, we can identify the first target, first potential price target or take profit target for any long trades close to this wick here. That's at 70,038. And of course, if Bitcoin continues to climb even higher, there's another nice multi-swing high resistance taking place here on 21st of May. And then here again on 6th of June, right? This is a very significant multi-swing high resistance barrier, right? So should we see Bitcoin prices break above this swing high that occurred on 29th of July at 70,038, this is where the first take profit target can be identified. And if we see this level get taken out, we can then target the first resistance as the next potential take profit target for Bitcoin here, right? And of course the pivot, right, should Bitcoin break above the pivot is then going to serve as a pullback support level at 68,495, and then of course the first support at 65,851 is also another pullback support level. You can see here this level at 65,851 previously functioned as a nice swing high resistance here, right? It functioned as a nice swing high resistance on 28th of September, and after breaking cleanly out of this level here on 14th of October, it has proceeded to now function as a potential pullback support level here. Right, so these are the key levels for Bitcoin as well. It looks to be making a bullish breakout today, right? And the first potential price target that we can aim for is the top of this wick here at 70,038. And of course, if prices continue to climb higher this week, we can then target the first resistance at 71,400, which is a multi-swing high resistance as the next potential take profit target. All right, so we've covered Bitcoin as well. We've covered most of the major currency pairs, some of the commodities, and the indices as well. Right, so before we wrap things up, let's just look at the Aussie. And also, everyone, thanks for giving your feedback as well. Truly appreciate it on the poll. Right, just will be closing that as well. Right, great. And let's just look at the Aussie. Right, the Aussie as well was been in a strong downtrend since the 30th of September. Right, this currency pair has lost at its lowest point almost 4.2%, right, dropping over 290, dropping almost 300 pips over a 2-week period, or rather almost a 3-week period, right, losing more than 4% and almost 300 pips. But since then, since last Thursday, it has staged a very nice rebound as well, right? Of course, with dollar index selling off sharply last Friday, this currency pair has retraced higher as well. Now, where it could run into resistance is at its pivot level here at 67.57. Right, this is a pretty decent resistance barrier that's accompanied by a Fibonacci retracement at 38.2%. Right, we can see here the Aussies, right, stabilizing here on Monday 7th of October before finally breaking underneath this level. And since then, right, since 9th of October, it failed to break above this level at 67.57. Right, you can see it attempted to do so on 9th of October and then on 11th of October as well, but it failed every time and resumed the downtrend. So there's a pretty decent resistance area here at 67.57, which is accompanied by the 38.2% retracement. So if you do see the Aussie continue to climb higher, right, after making this nice rebound last Thursday, if it does continue to climb higher, this pivot level at 67.57 is a level that we can use as a potential take profit target for any long trades as well. So close to this level here, right, would be a suitable area to identify as a potential take profit target for any long trades for the Aussie. Right, it has bounced off, of course. It has bounced off, of course, what is a very nice swing low support that has taken place here on Tuesday, 10th of September, right? A very nice swing low support that occurred in mid-September, and it's exactly where the Aussie has stabilized once more last Thursday before staging a pretty decent rebound here. Now, in terms of resistance, right, there's a nice overlap level at around 68.24. Right, this level previously was a nice swing high resistance that occurred on 29th of August, and then running into a little bit of resistance here on 19th of September and the 20th of September as well. After breaking higher, we can see it found pretty decent support here on 25th of September and the 26th, stabilizing here, creating a pretty decent overlap level, which is also accompanied by a Fibonacci retracement at 61.8%. Right, so the first resistance is an overlap level that's accompanied by the 61.8% Fibonacci retracement. Right, and also maybe is there a descending trend line that we can use? And actually, you can see the Aussie has broken out of a prior descending trend line. Right, right, we can see the Aussie has cleanly broken out of a descending trend line last Friday. Now let's see whether this gives attracts more buyers for this currency pair here, and if it does, we can then target the pivot level as a potential take profit target, right? So take note, we've seen a bullish breakout for the Aussie take place above this descending trend line, and if we do see this currency pair continue to climb higher, right, then we can use that pivot point as a potential take profit target. All right, so these are the key levels for the Aussie as well. Right, so just to wrap things up, right, we'll just wrap things up by taking a quick look at the dollar index once more. Right, it's climbed very strongly over the last 3 weeks, but it looks to have run into resistance at the pivot, around the pivot and the 61.8% Fibonacci retracement. That's at 103.70. Right, the downside confirmation level is actually a pullback support level that's at 103.27. This level is going to be pretty key as well, right? Because if we do see the dollar index, if this level gives way, then we can definitely expect dollar index to slide even lower, perhaps all the way down towards the first support. So take note, because it is also sort of breaking out of this ascending trend line. We can see the dollar index is also broken out of this ascending trend line, and if this downside confirmation level gives way as well, then we can definitely expect this index to slide lower towards the first support, right? And also last Thursday, 17th of October, we've seen a potential overbought condition being highlighted by the momentum indicators, the RSI and the stochastic oscillator. This is a technical setup that's similar to the one last observed on 16th of April. And this is where the dollar index stalled as well. You can see the dollar index failed to break above 106.52 and pulled back quite strongly over the next few weeks as well. So similar technical setup that we saw take place last Thursday. So we could potentially see dollar index probably remain under the pivot for now, and especially if it breaks through the downside confirmation level, we can definitely expect this index to accelerate and down and fall even further. Right, so these are the key levels for the dollar index here on the daily time frame. And let's wrap things up by looking at the calendar once more. Right, so take note, there's quite a few things going on. Right, we have several central bank officials speaking as well. We have Governor Andrew Bailey from the Bank of England, and ECB President Christine Lagarde speaking on Tuesday, 22nd of October. Right, that's at 1:25 p.m. and 7:15 p.m. GMT respectively. We also have the Bank of Canada looking to reduce its overnight rate by 50 basis points. This would be the fourth consecutive reduction in its overnight rate, but it would also mark the biggest reduction as well. Remember the prior meetings, right? We saw the Bank of Canada reduce its overnight rate by 25 basis points each time, but this time it looks like they're looking for a much larger one, and 50 looks to be on the table. And we also have the press conference later on at 2:30 p.m. GMT on Wednesday, 23rd of October. Right, so we have a very high, or rather, we have a very strong bearish catalyst for the Canadian dollar. Right, so with a large rate cut that, let's just say, it gets accompanied by a press conference that conveys further dovish rhetoric with regards to future monetary policy action, we can expect the Canadian dollar to face significant headwinds. So that would mean potentially dollar CAD is likely to remain elevated and climb even higher. Right, and then of course we've got a barrage of flash PMI data out of the euro area. So that's for Germany, for France, and of course the euro-wide area itself. And then we have it for the UK, and then finally we have flash PMI data for the US as well. Right, and then on Friday we've also got retail sales out of Canada. Right, so take note, there's quite a few things going on and this week on the calendar as well, but take note, flash PMI data for the respective currency pairs is going to be important. And of course, Bank of Canada central bank announcement is going to be injecting a lot of high volatility for the Canadian dollar on Wednesday, 23rd of October. Alright, that's all I've got for this week. Right, thanks everyone for tuning in to today's pre-market live analysis session. Do look out for all upcoming webinars brought to you by IC Markets for the rest of this week. Right, we've got a combination of live analysis, educational topics, as well as webinars in Thai and Bahasa as well. Alright, thanks everyone for tuning in. Have a great trading week, and I'll catch you all at the next webinar.